I think the president's peace plan in Iran is already bearing real fruits for the American people. Last night, 12.5 million barrels of oil went through the Strait of Hormuz. That is a high since the beginning of the conflict. Oil prices are down nearly at their level from the pre-war conflict. Gas prices dropped below $4 a gallon today for the first time since the conflict. And importantly, they're going to keep falling further given how low oil prices are.
Stocks climbing again today, oil falling, and the market betting the worst of the Iran conflict is in the rearview mirror. And it's all starting to show up at the pump, with nationwide average gas prices now below $4 a gallon. Welcome to the Big Money Show. I'm Brian Bremberg, along with my co-hosts Taylor Riggs, Dagan McDowell, Lydia Hu, and with us for the hour, Great Hill Capital Chairman Tom Hayes. Good to see you, sir.
Good to be here. Thanks for having me.
Well, President Trump defending his Iran deal as a win for national security and the economy. But he's making one thing clear.
Then it's a memorandum of understanding. If it doesn't get done in 60 days, that's all right. We go back to bombing. You know, I don't want to do that because it's so good. But we might have to, because we're never going to let them have a nuclear weapon. But they've agreed not to, and you'll see that very clearly in the agreement.
The Memorandum of Understanding opens a 60-day window for a broader nuclear agreement. Now the focus shifts to tomorrow's talks in Switzerland, where the real negotiations begin. Okay, Tom, I've been reading what all the pundits have to say. We can talk about that, but I want you to tell us what you think markets are saying about this deal.
Yeah, I think what you're going to see here, Brian, is this is a boon to consumer confidence. And we all know all the consumer confidence surveys for the last number of months have been at multi-year lows. Consumer confidence is tied to inflation expectations, and this is a gut punch to inflation expectations. They are coming down, and when consumers have a job and they feel that inflation is coming down, guess what they go out and do? They spend. And what have people been pulling back a little bit on? They've been pulling back a little bit on consumer discretionary. They've been pulling back a little bit on restaurants.
Everybody's telling me those retail sales numbers are awesome, though.
Yeah, retail sales were hot, and Papa John's is up even on that. I know it's our favorite stock.
Well.
Tom, don't egg him on. Come on.
You got that in the first 3
Papa
minutes of the
John's.
show. I love it. I love
But
it.
Brian does love a suck up, so.
Well, there you go.
I do.
Well done.
You know,
Flattering.
I think the other thing, with the exception of today, today you're seeing the AI trade is back because the perception was he was a little hawkish, and when you have that risk of slowing through increased rates, money goes into chips. It also went into chips because of the Apple Intel deal. But expect a back to the future scenario in coming months, meaning think back to January and February when you had massive market breadth, market participation across all sectors, Main Street. You're going to see that once again. I think the AI trade, believe it or not, is going to take a little bit of a breather in coming months as everything else starts to get bid now that we have some stability. President Trump chose economic stability over endless conflict.
Taylor, what do you make of that analysis? You can leave out the Papa John's part for a second.
Thanks.
If you want to.
A year ago, June 18, 2025, Brian, where do you think WTI was?
75.
Right where it is now. It's right where it is.
75.89.
I was going to say 89 too, yeah.
So like blink and we're a little bit lower. And of course you talked in your opening about prices at the pump. Those will take a little bit longer to come down. I know we're higher at the pump where we were a year ago, but WTI, I'm astounded at. That was a quick round trip. Okay, now when it comes to the markets, Brian, Evercore out with a really interesting note this morning saying that the positive SpaceX IPO, the fact that there wasn't a huge crash initially, combined with oil back below 80, sort of gives this risk-on sentiment that mirrors the 2021 animal spirits that we had, going back to dot-com era leadership, with AI leading that trade, and sort of keeps the door open for leverage outperformance. So one note that they had out was saying that they're long like leverage factors in terms of companies and stocks and ETFs that use leverage. So some of that makes me nervous when we think about animal spirits and .com. But we had been sitting here for the last month or two and said, like, why isn't the market crashing? Why isn't it? The market had totally read through Iran, and this, to me, had felt like a market that frankly, just wanted to go higher, that was looking at some of the economic data and the fact that things weren't totally falling apart, felt like this was a market that could just power higher. And I'm shocked, but I guess pleasantly surprised if you're long the markets, maybe not if you're short, that indeed has been the case.
You know, Dagan, I didn't hear a lot of people out there talking about oil falling as fast, I think, as we're seeing it falling. I did hear President Trump say once we got this done, you'd see oil come way down. Am I reading this wrong, or is this one of those cases where he's getting it right, where a lot of the experts were way too pessimistic?
No, I think the market was telling you that this is the direction that oil was going, that oil was, it never got to the highs that people were predicting, and that oil was way under the $100 a barrel for weeks, even before it was clear that this deal would be cobbled together. I think the market has been telling you exactly how this was going to turn out. And the reason that oil is continuing to tumble is Saudi crude oil is on the move. There are 3 Saudi-owned very large crude carriers that have reappeared outside of the Strait of Hormuz. This is Javier Blas at Bloomberg, with about 6 million barrels. These are not this is not new production, not restarted production, but this is crude moving that had been loaded in late February, early March, that was inside the Persian Gulf. Kuwait's oil chief saying that output will swiftly rise to pre-war levels. Kuwait has started boosting oil output, planning to exceed 2 million barrels a day within a week. So the crude is coming back online. And as we've talked about endlessly, even Japan, the one round in Iran's bullet when it came to the Strait of Hormuz, you spin it, it's gone. You can never use the Hormuz as a weapon ever again. Japan saying that it's going to now circumvent the Strait of Hormuz when it comes to importing crude from the Persian Gulf, still going to use the Persian Gulf as kind of a center for its oil and natural resources that it needs. It's just not going to come through the Hormuz. So that, again, that's a great sign. But the market, I said this April 2nd, the market staying and blowing up targets in the eyes of investors in Iran, that's not what investors wanted, because it raises borrowing costs, it cuts off commodity supplies, and it creates broad-based inflation. So the market powered through all of that because the military activity stopped. It's been more of a ceasefire than firing during this Iran conflict. And the market powered through it in part because of the mania, hysteria, and bubbleiciousness of the AI trade. But the market all along has looked through this and seen an end in sight. The only thing I would say is that in terms of energy production, the U.S. economy has benefited mightily from all of this energy production and the wild exports. So if there is a glut of oil on the horizon, that's actually not, it's good for inflation, but not great economically.
Lydia, let me come to you.
Okay.
I want to talk about, I mentioned earlier, the pundits are, I see a lot of negativity on the deal, okay? You're my umpire. You call balls and strikes, okay? Yes.
Wow.
Sober analysis. You live in the real world, okay,
Are you
Lydia?
sure? She might be a robot.
I don't know. Maybe after hours. I don't know. Okay. But on this set, is this deal? Is it a workable possibility to something that could approximate lasting, at least enhanced safety and security for the United States?
Gosh, I feel like you're throwing me a little bit of a curveball, because here I am listening to Dagan's eloquent explanation about oil and the economy and the markets, and I was like preparing my commentary about oil because I did some homework on that too.
Do that first, then. You do that.
Well,
and then
it's just a quick comment. It's just a quick comment because we were looking at inventories yesterday, and there were some talks about off camera because we had so much to get to yesterday, but inventories are at a 40-year low. And we saw the drawdowns from last week. They are more than double than what we were expecting. So there was a lot of concern about just inventory in the short term.
Well, I think that's the why now of why President Trump made that deal happen now.
Yeah.
Because the energy executives some of them were talking publicly and certainly privately to him about we only had a few weeks to work with in terms of the Cushing, Oklahoma inventories and the like.
So maybe what we're seeing, I guess my point is, or my question really is, you make a great point about all this inventory on the horizon. It really can't get here soon enough. I just wonder if the markets are celebrating a little bit too soon because we're a little bit tentative right now. You know, we got this 60-day period. If something goes awry here, if Trump is right, and I think he usually sticks to his word about we could get back to bombing, what does that mean for the Strait? You know, what does that mean for our oil inventory? That's my only point there. To get back to balls and strikes about the infighting among the GOP, which I think is such a great point too, Brian, because I think messaging right now, politically speaking, is so important for the Trump administration. And you got to look to where some of the loudest critics, the voices of who they are. Senator Bill Cassidy, Senator John Cornyn, Congressman Tom Tillis. They're not wrong. I'm not going to say that they're wrong in their commentary.
They have some things in common as well.
Right. But, I mean, I think it's also important to point out the context of what's going on. I mean, they just lost their primary seats. Tom Tillis is retiring, so maybe he feels emboldened and a little bit more. He has a platform where he can say anything that he wants, and he's not going to face the political consequences of it. I just think that adds context to this, you know, where they are not going to suffer the consequences now of maybe speaking out against the Trump administration. No, it doesn't mean that they're wrong or that they don't have a point.
I can translate what Lydia's saying.
Okay.
T.T. Tillis and Bill and their ilk, they're butthurt. They have their asses chapped. And the more that people talk out about this deal and are like gnashing their teeth and got their knickers in a knot, I think it's like the more people are against it, I actually am like, this is awesome.
Yeah. Look,
I'm not, it's just. Yeah.
President Trump once again pulled a rabbit out of a hat, and no one can believe it, and they're going absolutely crazy. And to your point, you were absolutely right, because if you looked at the forward curve during all of this, forward months were down. To Taylor's point, she's absolutely right. And part of the thing is we got bailed out by the AI trade. That's the only thing that worked during the war. I think we're going to see that cooling. And part of that is so much call premium was purchased by retail investors on semiconductors. And when dealers sell that premium to retail investors, they have to buy the stock. That trade is going to unwind. When you see that much premium written, I can tell you who's not going to get paid. The retail investor's not going to get paid. The dealers are going to get paid. So to your point, equity allocations at the 2021 peak highs.
Yeah.
The call buying is at the 20. So the opportunity is, it's still having a little bit of that fits and starts. It keeps pushing. The unmagnificent 493, January and February, the things that were ripping, go back to that. You'll find bargains, and you'll do really well while that trade is unwinding and people are getting a little nervous.
Okay, good stuff. Taylor, Intel.
You know what is not unwinding? And I didn't
and
plan
Apple.
this.
And Apple, too.
Uh-oh.
Intel, congratulations, everyone, because we're all shareholders in Intel, because we're taxpayers.
I want to check, though.
Me too. I want to sell, cash the gains, and I want to divvy. But until then, it's paper money. Turnaround Tom called this stock, but I actually didn't plan it. Let me give you the news. Serge, Trump said on True Social that Apple has agreed to partner with Intel, basically in this foundry business. So Apple makes its own chips. ARM designs them, and they were using TSMC. Now, in part, they're going to use Intel to manufacture that with the foundry business. We had talked, there were rumors about this, I believe, yesterday. But again, the deal looks like this is a bet on American manufacturing, on diversification of the supply chain. If you're Apple, your thoughts?
Super bullish. This is the onshoring trend. The good news is that all this stuff is going to happen. No one believed it at 19, 20, 21 when we were pounding the table at Fox Business. We sold our shares at 96 and 97. Maybe took a little hint from Dagan McDowell here. She's like, let's get out of the stock. I think, look, it's gone up higher. It's probably going to do great. The issue is, are they going to do all these great things? Yes. Is it priced in?
Yes.
Probably a lot of it.
Okay.
I don't like the fact that the U.S. government is behind all of this. I don't like the fact that we own a stake in it, quite frankly, because Bernie Sanders just announced he wants to have his sovereign wealth fund for the United States. So how do you fight back against a left-wing socialist communist idea when they're lifting it from the current administration?
Well,
Hold on, Tom. That's a deep tease to the C block of the next hour.